Well, good evening, all. Epstein with your Spider ETF stock market wrap-up, and this wrap-up is for Wednesday, the 27th of December, 2023. Well, another interesting day and another day where all the stock indices are up. So the Mag 7 and the markets that are trying to catch up to what they did, that is the play that is going on. And how long it wants to last? Well, probably through the new year. And then we start the markets, the people come in, they'll adjust portfolios and go, what do I see here? Volume is super light. It takes very little to move these markets in a major way. You're not going to get between now and the beginning of the year any major new reports that are market moving. Now, when we come back, we're going to get the labor reports, and already there's talk that 170,000 new jobs for the jobs report, but after that, they're trimming, and I was shocked to see this, I just read it, down to 80,000 new jobs. And what they're saying is just what we saw in the Richmond Fed, the Dallas, the Empire State, that manufacturing sector is weak. My argument, I don't know if that 80,000 makes sense. How do you have it when service sector has been so strong? So they have to be assuming that the service sector is going to give something up. If that's the case, well, yeah, then you get a different game, and there will be layoffs. How many temp workers are out there for the Christmas time, the returns from Christmas, and after that, UPS gets back to normal, FedEx gets back to normal, the stores get back to normal. So I do see and understand why they're saying that the numbers are going to come down as much as they are, but is 50% reduction too much, or where does that fit in? That'll be the big question that all are looking at. Late this afternoon, we saw that North Korea has told its munitions, its military, and its nuclear sector to all go on and speed up everything. The U.S. is making unprecedented action, and they want to go into their war mode, whatever that might mean. I didn't know they had a nuclear weapon, so there's something that I don't get there, but they have their nuclear sector, and they're going to do it. I think they're not getting enough attention, and that is often the case. You saw that Apple got a stay, if you will. They got a court where they order where they can still go on and sell their Apple watches. But I'm going to repeat, folks, do you really want one if they're not going to back the warranty? I've read reports that did say that if they lose this patent, they're not going to back the warranty on that feature in the watch. Well, I don't know. I think I'd probably hold off then and see what's going on. Seems to me a mess, but again, they're a $3 trillion company. They can do business the way they want to do business, and they don't give in on patents that they lose on or where they think there's an infringement or an infringement action against them. They just stand tall and they fight their battle. So those are things you have to look at and see where you're at. All right. So why don't we take a look at the charts? You know, one of the things I was pointing out was Nike and how poor I thought they were going to do. And obviously 4 days ago, this big gap in the chart where you went from just over the 120 level down to the 110 level like that has taken the air out of the market. How do you like that? Nike Air? Okay, you get it? Get what I was saying? So you can see how the market has fallen apart. The trend is certainly to the downside, but the market is getting down to areas where it's getting a bit overdone. First, it just went right to the 200-day average. That's the gray line right here. The next big support's going to be the 100-day, but where are the Bollinger Bands? Remember what a Bollinger Band is. It's an algorithm designed to keep the market trading within it 95% of the time. By its own nature, it's a resistance point when it's above the market, a support point below it. If you look at the market, you finished 107.13, the low is 106.95, and the Bollinger Band, 106.92. You don't buy Bollinger Bands for turns in the market, at least that's what I teach in my courses. You use it to cover shorts. And why? Because you're only going to stay under it 5% of the time. That doesn't mean it can't ride it to lower levels, but the idea that it's going to plunge from there, nah, you got to work your way down if you're going from there, not plunge. You're oversold. The bottom here is a slow stochastic. The traditional way to look at this market is when you're over 80, you're overbought. When you're under 20, you're oversold. Mine's going to look a little different than yours. I altered the formula. I studied slow stochastics with the founder, George Linn. Had him on many of my TV shows when I had the show Stocks, Options, and Futures years ago. Had him and all the old timers on. I showed him what I had come up with, and I said, I have found something, George, that when this embeds or locks in over 80 or under 20, the whole game changes. He looked at it, he said, I think you're onto something, go with it. And I did, and I'd show it to him until he passed away and give him different ideas what I was coming up with. And it's a big mainstay of what I do. I found that, for me, I'm very comfortable using that particular indicator. I used to teach relative strength, MACD. I had courses I would teach. I think this is just a better indicator. It's got a personality the others don't have. And personalities are important. Markets have them, and you deal with them, and indicators have them, and you deal with them. In Rivian's just looking good. I mean, come on. They're after the commercial van. And that is a huge business that they have gotten a good foothold in. Having Amazon take these vans and seeing them all over Chicago certainly helps. Normal, Illinois, where a lot of them are built, isn't far from here. You see their trucks, but not as much as you're seeing the vans. The vans are everywhere now. Higher lows, higher highs. By the way, one of the things that Amazon had a problem with, because I went to the driver and said, why aren't there more in my area where I'm at? And they said, they haven't put in the chargers in big way. They brought the trucks in, and then they didn't have all the chargers we needed. So I'm imagining they're getting that done very quickly. In the gasoline funds, you're overbought. You have a market that got up one time. See this gray line? It's the 200-day average. It has been the nemesis of the market. The market doesn't want to stay over it. Why people didn't go to a 250-day moving average, beyond me, because a business year is 250 to 260 days with the standard amount of holidays. But they went to 200. I can live with that. I don't want to fight the herd. I want to be with the herd and then use the herd mentality in trading. So what we have is the trend of the market, which is this line that you see going on top or below each bar, which represents one day. It's called a swing line that I developed. It's got a pattern of lower highs, lower lows, which is a downtrend. However, when a market is over the 18-day moving average, which is the red line, that determines bias. When the market's over it, the bias up, the trend down, that often means the market wants to go back to the 18-day average to figure out what to do next. The neutral line, you might use a 21-day, a 20, or an 18-day move average. I find the 18 is the better fit for the market. When I look at XLF, the financial service sector, already you're hearing the analysts saying for 2024, one of the areas that's undervalued and is going to catch up are the financial services. There's my voice from doing radio. I'm not very good at that. Lower low, higher high, is it going to embed? Well, right now it's overbought. Embedding means it locks in. When you get a pattern like this, it often means a market moves to the upside if you had that pattern locking in under 20 to the downside. In XLI, look at how long you've had the bullish embedded pattern. Look what the market is doing with it. Learn how to trade with these. I have clients, if you get my morning subscriber video, I've got them in XLI, ITB, XLK. I mean, we've been sitting here with embedded readings galore and doing, I think, okay. In AMC, this is not good action. Now you've got an embedded reading. So the market will bounce away while that occurs from the Bollinger Band, but it doesn't mean it's ready to go up. To get this market friendly, the red line has to close over 20. I told you, I have owned a movie theater. In that theater, you learn the business. When I saw that and I saw the failure of Aquaman 2, game over. There's no other movie that's going to carry you for a blockbuster right now, Christmas viewing. Ferrari's nice for guys like into the niche of racing and so on, but it's not an everybody movie. Wonka is the big winner, and that's not a big winner when it did, what, $300 million or so, or just under it for that weekend? I'm not impressed. And it's weighing on the stock, as you can see, and they're probably not going to get good movies until the end of the first quarter. I mean, it's a dead time coming up. RSPD, which is the consumer discretionary, all we've heard about for months is the consumer's dead. Well, in November, the market came alive because of the consumer. You take a look at what happens when you get a slow stochastic and look at the pricing. Learn how to work with this tool. Generally speaking, momentum leads price, not price leads momentum. So understand it, understand how to work with it, and you give yourself another tool. In XHB, which is the home builders, well, how can you not be friendly to the home builders? They figured out back here, and if you were watching me when this was occurring in the break, I said, don't bet against the home builders. And by the way, these videos are all there, so go back and you'll see me talking about it in October. They're up there on YouTube. I said, they'll figure out just what they did before. Age is a good thing in my case. Why? I've been through the cycle. They know how to buy down mortgages. They know how to offer you refinancing options. They'll figure a way for you to come in the first year and a half in a much better rate, betting that interest rates will fall. Well, that's exactly what occurred. So people are buying the homes, and there's big pent-up demand. There's not enough supply. Mortgages, if they can ever crack a 6 number, you're going to see a flood of people that want to get in before they get nervous that rates will go back up on them. That's what I think, at least. In the energy sector, I'd be very cautious right here. I just read a report where Maersk is now talking and booking a substantial amount of ships that are going to go back into the Suez. We saw Haig said, no, they're not going to do it. So you've got different things going on here. I can't imagine, if I'm an insurance company, that I'm going to allow that to go without really goosing the rate if you want insurance from me. Why? I don't see the coalition having taken control of the Red Sea. Number one, it's huge. Number two, plenty of drones. You know, the ones that we shot down yesterday were all from fighter jets. How many jets can you keep up in the air all the time? So I'm very concerned. I don't understand what the coalition has going on. That's not a negative. I just don't understand how they're going to monitor the sea. So don't take it in a negative manner. I want it to be positive, and I want the shipping to go there. In tonight's full research report that I've written, I show you the map of what it looks like if you can't use the Suez Canal, and how many other miles you got to add on. And this is the reason that Maersk and other of the shipping companies are dying, if you will, to come and get back into the canal. So when Maersk said that, what do you think the value of their stock and the other competitors did? Why? Less revenue. Again, if you're adding another 7 to 11 days of shipping time because you can't use the canal to get to Singapore and other parts of the world, just think about what I'm getting at. And you take that back. They're not doing it for free. They're not just doing it for the freight cost. So less money that they make on that. In the gold market, I don't see why gold would not just keep going. Now, the London exchange, talking the bullion exchange, hit an all-time high close today. That's a little different than what the futures do, but you can see that the bidding is coming in. People aren't betting that inflation's going to fall apart. People are betting heavily that the U.S. is going to cut rates in 2024. The question will be, when we get back from the first of the year, the race is on who's going to be the first major bank to cut. A lot of people think it'll be the European Central Bank. Who knows? In SLV, I still remain in the bull camp here too. As long as it can stay above the 18-day average, it looks friendly, possibly getting up to the $23 mark. In copper, still bullish. If all these G7 nations are going to lower interest rates to spur on industrial activity, away you go. Now, there is a negative. Remember how I started this tape up? When I was videoing this and I began, what did I say to you? 170,000 jobs report down to 80, less manufacturing. So it sort of flies in the face that the copper market's going up. Year end, you always get these arguments, so be careful of them. TLT, look at where interest rates are. Just 6 weeks ago, the big bets were coming in that were going to 6% plus in the 10-year. You're at 383. Come on. I mean, if you think this is an easy time to guess what these markets will do, forget it. The guy that got it right, nobody's saying it, Ackman. He got bullish, and then he said, nope, I don't like it, pulling out of that bet. Made it very public. And the market reversed course, never looked back. He got that call very accurate. UUP, which is the dollar index. You know that I put out a dollar index report a week and a half ago now, calling for bearishness. Did it back when we were over here. Look at how the market has come down. So this gap was very important. And now how much is it going to leak? In the futures, you could easily crack the 100 level very shortly. So I'd be cautious right there. But you've done this type of move up and you've done this type of move straight down. At least here you got a correction and you move to the right-hand side. You didn't do that. Let me get back to the FXE. Here, the first challenge of a Bollinger Band, see how you're up here, is often where the pros take money off the table. Why? Because of that 95% of the time it'll stay within the band. So as it kisses it, they'll step back from the markets. Now here you kissed it, you got your bounce. Here you kissed it, you came in, got your bounce. Doesn't mean you're going to break the trend, but they'll be able to come in if they want to stay on the long side, ideally at a lower price. And that's how you put this all together. I want to remind you on our free offerings, this is a great time to take advantage. All you do is click the blue button. When you go to our website at iraepstein.com, that's iraepstein.com, all you need to do is go on the top left to free offers, give it a click. This is only part of the page. It'll drop way down. Choose the ones you want. Then you go in, you put your name, your email address, and we'll send everything out by email to you. Take advantage. My reports. You want to take a look at price counts. It is something you're not going to see anywhere else. This doesn't tell you when to come in the market. It gives you an idea where the market's going after the trend sets up. It's what it's called as a price count, and it gives you some really great ideas. We also have a course that you can get with it. Just talk to our brokers, and they'll be able to get that all hooked up with you, and away you go. In the meantime, I'm Ira. You have yourself a great evening. I'll catch up with everyone tomorrow.